Hey folks, alright, hope you're doing super well. Let's see here. I'm going to pop out really fast, read through the disclaimer. It's been up there for, well, a couple of hours now. Please make sure you read through the disclaimer, as it's always important to understand that this is for educational purposes only, nothing more. Okay? And we can go ahead and get out to the charts, where we'll try to get at some sim trading today. And let's see. Okay, very good. Thank you for the comments coming in, by the way. Most appreciated. So let me. There we go. Okay. All right, everyone. There we go. So we'll get this this party started. Here's what you'll see so far, but hold on just 1 minute. Let me kind of clean up my charts real quick. Or excuse me, my monitors. I just have to move things around with, okay, there we go. Okay, so I'm hoping that, I know this sounds bad, folks. Please don't take me the wrong way. I'm just hoping that price declines this morning. We can kind of talk about the reasons why and so on and so forth. But I mean, it pretty much always just comes down to a pretty simple answer. I would like for price to go down because there's a better entry below. And as you all know, the preference, our preference, as with, I believe, most any investor, is to buy low and sell high, right? Okay, but you don't always get what you want, and unfortunately, this may or may not go down. I don't really know, but what I do know. So I had it set up this morning. It's actually perfect timing because we're right into it as we speak, right? So we had a long entry this morning that came in. I believe it was about 40.22. Got the fill on 22.25. So the trade is actually happening right now. We got core. We got a lot of data out this morning, actually. So I would encourage you all to maybe take a look at that. We got core PPI, core retail, PPI, retail sales, etc. So look at the core numbers. In line with expectations on the core PPI, very important number, as well. So with the retail sales, yes. So remember, we've talked about this recently. Just a short little while ago, it was the whole good news is bad, bad news is good type of thing. Yes. So, as we mentioned, like I said just a little bit ago, we need to kind of stay focused on what the market's doing. It has been pricing things in, and as mentioned, it will get bored. So the market has a very short attention span, right? And so as you notice, what one would expect with the numbers that came out this morning based on the previous, I don't know, 2022 for the most part, based on the previous trading activity, one would expect a vertical rally, okay? Because that's basically what we were getting, inverted, of course, on the positive news. So for all intents and purposes, go back a little bit in time, we were getting really good data coming out, really good retail sales, core PPI, etc. So it's all to do with inflation, and that was indicative that we had a lot more work to do. Right, and when that happened, were knee-jerk reactions all over the place, and we would essentially drop. We would have a huge decline. So right now, we would expect the opposite because we're getting the inline numbers or even negative numbers. So that's indicative that what the Fed is doing is indeed working, and they may be able to back off, and you get the whole picture. Okay, so that's kind of what we're doing. That's where we are, and yeah, so again, one would expect a vertical rally. So we'll see how that goes. But what I would encourage you to recall is that, again, I don't mean to be so redundant, but I can't say it enough. Remember that the market's anticipatory, right? So it's always trying to look ahead, therefore pricing things in. And I believe that the markets have gotten a bit bored with this, news-driven knee-jerk reactions and so on. So I don't know. We probably will get some positivity ongoing, But don't be surprised if we actually, if we have a little bit of a decline from it and then maybe go higher or something to that extent. Now, okay, got all of that. Here's the thing. What is different about how we approach the markets every day, right? We talked about this yesterday. We had two setups in the room, both of which worked out very well. If you were using the trigger lines, they were break even. If you were using the targets, both of which reached the target. Today, rinse and repeat, okay? So as you can see here, we have the entry at 40.22. Again, the actual entry, if using limit order, 40.22. On the fill, there's a tick of slippage, 40.22 quarter. Okay, so that puts a stop at 40.10 quarter, and then we'll have trigger line 40.32 3/4, target destination of 40.49 3/4. It could be 40.50. Okay, it's excuse me. Could easily be 40.50 if you want to get all technical about the one tick situation. Okay. All right, so that's where we're heading now. Based on our analysis from yesterday, note that nothing has changed. Remember, we went through this step-by-step process. We determined our analysis. We determined that we would rather be the buyer than the seller, right? Okay. So then, again, we had those two from yesterday. We're going to go move forward with this again. Now, I will tell you this is actually the second one from today, the second entry, I mean. And so previously, we had this entry back around, it was approximately the same, but it's around 40.19, I think it was, something like that. So you're looking at about a point different. It's really not too much that is notable there. But suffice to say, I just wanted to let you know that that particular trade from earlier this morning was a break even. Again, if you're using targets, right, if you're the scalper, then it reached the target. So I will begin next week, most likely, because we did talk about this, and I very much respect the point that was made, and agree with it, absolutely do. The point was that, you know, essentially, if I would use the short-term targets as opposed to attempting to let the trades run, we would just get to see more activity with the software features and functionality. So that makes sense, absolutely. But remember that, you know, it's tomato. It's a personality trait. You know, some are going to want to sit back. Like right now is just the perfect example as always. So right now I want to sit back. Yes. Well, if price makes it all the way up here to not quite a 3-to-1. Definitely over, so between a 2 and a 3-to-1, right? But that's fine. So the point being there, if price were to make it up there and we have to sit and do nothing, you know, I could go to lunch. It's a little early for lunch, but you understand what I'm saying. Maybe this is happening a little bit later in the morning or something to that extent. I could simply get up and walk away, and I have nothing to do. If I don't do that, okay, then I have a decision to make. I can either be done after this trade and just, you know, I need to go ahead and quit so that I can go to that lunch or the meeting or whatever I'm trying to do, or I miss my meeting, you know, or the lunch, etc. So there's really no way to, you know, you can't be in two places at once, right? Of course, all the technology, we can take our laptops with us and this and that, but can you imagine having lunch with a friend and staring at your computer the whole time? I wouldn't want to be that friend that you're having lunch with, because, you know, I mean, while I would be extremely understandable, I would also say, hey, you should probably have just stayed at home. I don't, you know, want to be your inconvenience, right? So I wouldn't want to do that. So it's up to you with the personality, as with everything. But as you know, I do prefer the larger moves in the market. That doesn't mean that I'm not going to alter that for you, so we can, you know, put the tools to use a little bit more. Okay. And like I said, I'll probably start that next week. Okay. Very good. So we have coming up, it is 9:10. In about 5 minutes, we have capacity utilization rate, industrial production, so on and so forth. Business inventories at 10 a.m. and then Beige Book FOMC member Harker Speaks at 2 p.m. Yeah, you know, I mean, you kind of gather from my voice and how this, you know, okay. I mean, it's not anything that I'm of concern. So what I can now do is pretty much close down my economic calendar, as it is really no longer extremely relevant to or for me. Okay. All right, very good. So let me, I think there was, hold on a moment, guys and gals. I'm going to get to the question real quick. What are your bar settings? Yeah, 22, so it's 222.44. 222.44, my man. If you go, do you mean like, what, I'm sorry, maybe I should have said that, because I know you can see them. Do you mean would I explain them, as in like what do they mean, or did you just want to know what they were? Yeah, are you meaning like an explanation of what they mean? Or just this? Okay, yeah, maybe I'm just misunderstanding. Because if you wanted just the settings in themselves, yeah, it's 222 and 44. Okay, just are those the numbers? Ah, thank you, sir. Yeah, those are the numbers. Absolutely. So in the actual settings, which I can show you real quick. So I'm going to go here. I'm going to right click. I'm going to select data series there, and here. Okay. Yeah. So what I'll notice here is I'm using last price based on our PFA Renko bar with settings of 222.44. I got about 30 days loaded. That's unnecessary, but I'm not going to reload it now as I have an active order. So I really don't. I could use like 3 days. Again, that's not really relevant because this is more focused on real-time price movement. I don't use it for historical purposes. So meaning I'm not going back and looking for supply demand or anything like that. I'm just using it for real-time execution. Yep, so we have that bar tick at 2, open offset at 22, reversal ticks at 44. So the most important part here, as you've heard me say, many, many times, in our opinion, is it's not going to be the execution, which is ironic, okay? It's going to be, sorry folks, I forgot I had a recording running and I forgot to cancel it. So let me just close all that out. There we go. Yeah, it's not going to be the actual execution portion. Most would, including myself, especially when I started out, like that was everything. I mean, that was the most important thing, and that's all I wanted to figure out. My execution strategy. But it didn't take too long. Actually, it did. I guess you could define the amount of time. So it took a lot longer than I would have liked, let's put it that way. But I eventually got it to the fact that is not the most important part. In fact, that's the least important part. The most important part for myself, and then as going with PFA methodology and so on, which is a derivative, it's the analysis. It's simple. Get a read on the market. Should I be buying today? Selling today? Both? Neither, right? That's the most important part. Once I get that, my execution is the secondary object, right? I don't even bother considering it. I would never even think about my execution strategy unless I've deemed my analysis on the buy or sell side, or both or neither, as I said. Okay. All right. Very good. Yeah, that's all right. We encourage questions, and good morning to you as well. Just saying, first time with tons of questions. Excellent. Go for it. Absolutely. Let's see. You're very welcome. You're very welcome. Yes, absolutely. So, okay, earlier there, Benny, your comment about the weekly and the 4-hour, you're absolutely right. Don't forget, you're absolutely right about that. You're just talking about a much larger. Remember, we were talking about swing and position trading with those time frames, and just today we're looking at shorter term, much shorter term actually, and so that's the reason. Remember, this essentially this is our LTF here. And that's why, as we were talking about yesterday and then following through today, that was a little bit different approach. So, for example, can I buy, let's say, hypothetically, can I buy in an uptrend? Or excuse me, can I buy in a downtrend? Well, you know, of course, because that's very subjective, isn't it? Because if I said, hey, can I buy in a downtrend? Well, what downtrend? You know, like where am I buying? What if I'm in a daily downtrend? Do I want to go buy all the daily levels? Not so much, right? I would rather have already sold and be going down with the downtrend. So I'm trying to remain relevant to the corresponding time frame. If I'm in a daily uptrend, of course, I'm attempting to get with that uptrend, but only at the right location within it, right? It's all about that context. So suffice to say, though, I can absolutely buy in a daily downtrend on a different time frame, because on a different time frame I may be in a, let's say, 60-minute uptrend, right? So it's super subjective. That's why we don't allow that, meaning the subjectivity. That's why, as you've heard me say many times, what do I say verbatim? Pick your poison. Okay, so the little phrases that I use, I try to be consistent with them so that we really stick in the, ingrain in there. So it's 9:17. We got about 13 minutes here on the open, and we'll see how things go, right? Currently, okay, so if we look over here, let's focus on this real quick before it gets too late. But feel free to ask all the questions that you like, and then I'll cover them as we go, and then I won't leave until I try to get them all answered. On the Renko, how do you use the RBR DVD markers or not? Yeah, I'm not really using those. So what you're going to see is same thing you've been seeing. Of course, however long we've been doing this, a couple weeks, and we're just using the execution, right? So if I go here, do you see how up bar entry is on? So what I did, as price was, this is very important, as price was declining, I absolutely waited for price to go down like this, okay? And what I did was I went up here, like I'll do it on the secondary because I have no secondary entry, so you'll see all the entry types, right? So I went up here into my primary, of course, but again, that one's already active, so I don't want to mess with it. I went here, I selected up bar entry. All right, now that up bar entry began, and it was seeking the up bar, right? So it just kept declining, and that's good. That was a really good thing, because the further down it went, it's a good thing. Again, buy low, sell high, right? So right there, okay? So as it's seeking that entry out the entirety of the time, what it did was instantaneously, when that 22 was met, the entry took place. I can tell you all from personal experience, okay, based with the methodology and so on, there absolutely is no way, for me or anyone, in my opinion, to function fast enough to do this. That's why the software, right, that's the purpose in pretty much all software is efficiency. So if I tried to do this, what would have happened is by the time I got to it, by the time I attempted to actually click the buttons or what have you, price was already trading up here, right? I mean, it happened within seconds, just very, very, very fast. And so that's why I need to get ahead of it, not attempt to wait for it and then react, right? So it's not reactionary. Definitely don't want to do that. I have to be ahead of it, anticipating its every move. Okay, so that's what happened this morning, and if it needs to happen again and so on, it will. Suffice to say, right now, if let's say I were seeking short positions, okay, well, what I'm going to use the secondary menu. It's currently I have the settings. I can tell you. Let's see, what's it submitted to? Okay, well, it's submitting to the micro. I have my hedge instrument or secondary menu here, submitting to the micro E-mini. So the equivalent of that would be 100 contracts, right? So 10 times 10, of course, the micro being 1/10 of the E-mini. The micro E-mini is 1/10 of the E-mini. So therefore, 10 times what I have here would be 100 contracts. So if I wanted an equivalent value, I would have to go over here and submit 100, contracts, right? So I'm not going to do that. I'm just letting you know. But none of that's really relevant. So what I would do is I would go here, and I would just toggle that down bar entry on, right? And then of course here I'd go increase this to 100 and so on and so forth. You can see there the market is the micro E-mini, whereas over here it's the E-mini. Okay? And you can see the label there, watch it. It'll travel with current price. Okay? Now if I were to go click submit, in which case if that bar were to close down, it would instantaneously be filled on a short position. Okay? So I'm just going to toggle that back off. I don't want my chart to be a disaster. Okay. How can I set up that chart, the one on the right? So you would want to just open any chart, right? And so long as you've installed our software, you can right-click the chart. Okay, so over here, just again, this can be any chart. Number one, of course, you'd want to put the PFAZoneSuite on your chart, and you can do that multiple ways, but as you know, we've provided a template for you to do such. So you could right-click the chart, go down and select Templates, Load, and there will be a PFAZoneSuite template already there. Conversely, let's say I just have an empty chart and or I don't want to use the version that we use. Maybe you put moving averages on your chart or something like that, and you just want to add the PFAZoneSuite. You can right-click the chart, go to Indicators, okay, and from the Indicators list, scroll down, find the PFAZoneSuite here, add it. You can see that we've already done that. I just simply labeled it as PFA as opposed to PFAZoneSuite, okay? And now you'll have the software on there. The next thing that you need to do, depending on what time frame you already have on your chart, is right-click that chart, go to Data Series. Now go over here in the type, is probably going to be on day, minute, something like that. Switch it to PFA Renko, okay? In the settings, we want to put 2, 22, 44. This is irrelevant, as I said before. We could just, I think it will auto-populate 3 days or something like that. Just leave it as, that's fine. This is not historical analysis, so I don't really care. I just need the real-time data. 3 days is more than sufficient. And then go down here and click OK and or Apply, and then OK. I just click OK because I'm kind of done. So that's what you'll get. You'll end up with the chart that both has the Renko on it as well as the PFAZoneSuite to do that. Now again, just depends on what you want your chart to look like. Do you want a different background color? Do you want another indicator on there? We always discourage it, right? I can't tell you the amount of times that we've had to do support tickets because of other, and I don't mean this derogatory or not trying to say, hey, one's better than the other, none of that. But just factually speaking, we have seen so many issues arise from having other indicators on your chart from third parties. There will be an error in the code, or there will be some incompatibility or something as such, and what that will do is cause other errors, and basically none of your software will load, and then you try to go in and fix it, but you can't because you don't have their source code. You have a compiled assembly. I don't want to get in coding. I'm not trying to talk about coding here. I'm just saying it's a little complex. So just make sure that you're either using NinjaTrader. If you want, like other, if I wanted to go in here to indicators, and for whatever reason I wanted, say, an SMA, right? So let's say that I wanted to add a moving average. I could go here, and that's fine. It's a standard indicator that is inclusive, okay, with the platform, or rather the platform is inclusive with it. No problem. If you're getting it from a third party, no problem. Just make sure that it doesn't have any errors in the code first. Maybe run it on a chart by itself. Make sure you have no issues, things like that, and then load whatever you like. Okay, so you can do it that way. Now, the other thing is, and this is something that we are happy to do, as far as supporting our software and so on, our software is extremely, just to say how it is, very robust. There's a lot of things going on here. You know, the order management, I mean, there's so much underneath the hood, tons of tools built in, multiple zone types. I could go on and on and on, right? There's a lot. There's so much, in fact, we had to build our own custom interface. And so there's a couple of, I guess I won't throw out any names or whatnot, but there's only a couple of companies who actually do this. And the reason that we have to do it is just, again, because there's so many settings and things to that extent. We need a more efficient way of doing it. You have to understand, you know, NinjaTrader as a platform it's as good as it gets, right? Because they've built their architecture to allow us extreme flexibility, but they're not going to go do the work for us, right? I mean, they're not going to give us, you know, you can't expect that. And so if you build, you know, a piece of software that's extremely robust, you're going to have to put in some legwork to, you know, build a custom interface. What you'll get is this right here, okay? So this button up here, icon, this is called our user inputs menu. By the way, these are covered on our tutorial. If you check out our YouTube channel, give me just 1 second, in fact. I would encourage you all to maybe do this if you can. Just loads of tutorials and things like that here. Let me get it real quick. Okay, and I'll just, paste this to everyone. There you go. Yeah, so that's the channel. If you want to go out and just kind of search around or whatnot, you'll notice there's actually a section there. I think they call them sections. It's scroll down a little bit, but it's called software tutorials. Now, some of them are a little bit outdated, but they still, you know, in other words, there may not be every single, you know, setting or something like that, but it's what you need, okay? And if you have any questions, we're here to support. But what I was going to further say is in the event that you wanted to have exactly what we have right here, I can share the template in which I've created, if you will. It's a custom template. Because as I said, we built our own user interface that includes templates. So when I say PFA template, I do not mean a NinjaTrader chart template, right? They're very different. Two are not in the same. So with NinjaTrader, you access their templates from here. You can load or you know, save, whatever you want to do with a template, but essentially it's going to affect the chart's architecture and the indicators that are on the chart. Okay. Now, it will save 99% of your indicators. It'll save almost everything because they don't have their own custom user interface. But because we had to do that, and we have our own saving mechanism, the templates and so on, it is not going to impact our, our software. Okay. So what it would do when you load when you load the NinjaTrader template as such that we provide, all that does is says, hey, load the PFAZoneSuite on that chart. But it doesn't have anything or any impact on the actual settings of the PFAZoneSuite. In order to accommodate that, we need to go into our template system. Okay, so you can see up here our templates, apply, save, load, etc. And that's what I was trying to tell you. Like I can, assist or even provide the current template in which I am using. Right? And as we do, we always provide the default template in the installer. So you already have it. But I believe we've made some recent changes based on this method of trading in which we're doing. I'll be happy to share those with you. If you have the software, just open this user input menu up here. And then what I want to go do, I'm trying to think of all the changes that we've made. If I go to order input specifically, you can see here we have our secondary. We have our primary going to the default instrument. So that's not going to have any impact whatsoever, right? The hedge instrument, you can see here where it says submit orders as, we're submitting them to the default instrument. The default instrument is what's on the chart. In this case, it's the E-mini, not the micro E-mini. Okay? So whatever I change this chart to, that's where the primary, which is this, okay? These orders are going to go to the corresponding market. I also changed this to default from trigger lines. We expressed our concern for longer term trading. I think we did that, was it yesterday and the week before? Okay. The issue with the longer term trading is that if you don't submit the orders as default, the trigger lines are held on the local machine, local PC. So if you lose internet connectivity, if you lose power, so on and so forth, you know, heaven help us, we never know, but that could happen, okay? And then you basically end up with a naked order. So if we're doing bigger trades or trying to hold on to them, things like that, I'm going to use the default method, because in the case that my entry gets filled, now my target and my stop are not sitting on my local PC, they're actually sitting on the exchange. Key distinction there. Once the order is filled, and there's nothing you can do about this, okay, it's typically broker dependent and so on. So let's say TD Ameritrade, Thinkorswim. You can submit anything on Thinkorswim and it's server side. Doesn't matter if you close down the platform right then, they hold it on their server, even the bracket orders from get-go. The order doesn't have to be filled or anything like that. Trust me when I tell you there are many, many limits and downsides to that as well. Well, not that, but what I meant was Thinkorswim and TD Ameritrade. So as a day trader, as an active trader, swing position, whatever, there are massive limitations, okay, just to throw that out there. But it's very good for investors, you know, things like that. Can go either way, just to let you make your own opinions. But I would say that as an active, like a very active trader, you know, I really want to be using something more like NinjaTrader, because I think it's just way more efficient. Now, given the way that we've developed our software, of course, it's just, for the way that we do things, it's paramount, right? Okay. So anyway, going into the settings, I have default instrument here, good till cancel, market if touched. I have not disabled the OCO. In fact, I want that on. I did not enable the entry zone. And down here we have the submit orders to the hedge instrument, which, as I just showed you, was the micro. That's why when I hover my mouse here, remember how you saw the micro E-mini and then I explained that a moment ago? Okay. All right. So that's also market if touched orders. Now, if, let's say, I were submitting secondary to SPY, okay? In other words, I went up here and did this, okay? Something like, and I set my hedge instrument to SPY, and then with my secondary menu, I submit the orders to that hedge instrument, again, the SPY. So I might want to consider using limit orders, right? So I would go here and go, okay, let's change that to limit. And now, do I want that to be submitted as good till canceled, day, etc.? But you get the point. I think most of us understand all of that. I just want you to understand how the software works, right? All right, so I'll leave it as it was. Go back up here, change this back to the micro E-mini. And that's the settings I think that you need. Now, going from the general properties, if you're trying to duplicate this, I can absolutely just provide the template. You don't need to do any of this. I can literally provide the template. You save it in your documents, you know, I'm not going to give you the whole directory, but essentially the templates folder inside of NinjaTrader where our PFA files are stored. If I provide the template, you literally save the template, and that's it. You have every setting that I do. Now all you need to do is come here and click Load Template, and it'll load that template in your options, right? So if I click Load right here, and then I were to, you'll see available templates in there, you would see the template that I've then provided to you as well. You click Load, it would load all these corresponding settings. You click Apply, and then you have the exact same thing that I do. So that's how that works, okay? Very good. What do you think about adding a long position if the market goes back below the entry price? Below the entry price. Oh, yeah. So, okay. You're talking about the one that we're currently in, is that correct? You must not have been here from the beginning of the session. Okay, so here's how I handle that. And this is across the board. It's not like this one, you know, trade or something like that. So long as an exit order, or label rather, has not been reached, then I'm going to be in that trade regardless. So sure, I mean, I could go down there and submit and I could go down there and enter, like right now, for example, if I wasn't in this trade, I could go hit the buy button, sure, because my trigger line nor my target, and obviously not the stop, right? But as long as my trigger line and or target is not reached already, then I'm just getting a better entry, okay? Now, if one of my exit values have been reached, for example, if it went up and hit this 40.32 3/4, which was the trigger line, my trade is now concluded because that moves my stop to break even plus commissions. If price were to then fall back, I'm out of the trade anyway. That trade is done. So it's, you know, a pretty simple answer, I hope. I hope it's coming across very simple. But let me repeat it in a way that I think is very simple. As long as none of my exit values have been reached, sure. Okay. So it just has to be at my entry or better. So that is a very important distinction, isn't it, right? So think of that like a limit order. I would absolutely not be chasing the trade. So I would never go enter it right now, okay, because that's above my entry. Now I would, because it just hit the entry or lower. But yeah, I would definitely never go chase that trade. It just is what it is. Okay. So again, folks, I know this sounds bad. I'm just hoping, I got like kind of my fingers crossed here. This is, you're gonna say, wow, man, that's bad. I hope it goes against you. But I do. This is just, I'm like, come on. I really want price to go down. I would like to get involved with a better entry below, but we will see how that pans out. Let's talk about a couple things. Okay, right now the VIX is trading at 1914. Okay, 1914, folks. Let's go back several years. That would have been, you know, it's getting up there a little bit or what have you, maybe. Okay, so I usually value about 28. So that was years ago, at least prior to 2022, okay, even 2021. But so really, once you arrived at 2022, things have just drastically changed. Now it's trading at 1919. I'm looking. That is extremely low, okay? So what that tells me is the ironic part of this, that, you know, because remember, short-term trading is very different from bigger picture, longer-term trading. But on a bigger scale, not so much. This is not looking good. It needs to decline, right? It needs to decline. Are you adding to a losing trade? Absolutely not. No. That would be very, very bad behavior. We wouldn't do something like that. Unless that's your strategy of dollar cost averaging, if that's what you're talking about. But as far as just having a trade on and then, and getting emotional and not exiting the trade as we should, but then going and re-entering the position to add to it in hopes that it'll do better and all that, no, definitely not. Yeah, that's bad news bears there. Okay. So what you will see is if this is a losing trade, it just loses. You know, we're not going to add to this position. It is what it is. So it's either going to go down, it's going to hit that stop, or it's going to go up. This being, as I said before, the second trade of today. Was it the fourth one? Yeah, this was the fourth one from yesterday and today. These are the 2 days that we've been in the room. So this, all three of the trades have been really good thus far. Yeah, so they've all at minimum reached the trigger line, dependent on if you were using a trigger line or target. We talked about this yesterday. But yeah, so that's 3 thus far out of 4, right? Now we're on the fourth one. Why in the world would I get emotional? You know, just not something that I'd want to do. All right. But yeah, as far as the VIX goes, let's circle back to that. Again, folks, that's very, very low. The VIX is trading at 1909 right now. I absolutely wanted to see, I've said this 100,000 times, I'm joking, but I've said it a lot. I wanted to see I was trying to say VIX and Spike at the same time. I think it came out VIKE. Anyway, I wanted to see the VIX spike to above 40, right? We didn't even come close. We got like to the low 30s, I think, or something. But this is not what, in my opinion, this is not what we need for a true reversal to have taken place. And we still may get it, unfortunately. So if we get a spike down, or rather a drop down, and we get a spike up on the VIX, that's when I'll start getting very enticed for, the longer term view. All right. So maybe I did not understand. If you're in a position that goes against you, are you adding to this position? As I said, no. Right. So it's okay, no worries. If the position goes against us, we're out. There is no position. Right. So it's either right or it's wrong. If the position goes down, you can see the stop right here, right? So if the position goes down, it's just going to take us out of the trade. That's it. It's a done deal, right? Yeah. Does that make sense? I just want to make sure that I try not to leave, I don't want to leave anything unanswered. I want it to make sense. But just to reiterate, I want to be very clear about that. No, we're not adding to a position at all. So you never, hold on a minute, I'm sorry, a couple of questions coming in. So where did that go? Oh, so you never get out before the stop limit, you just let it run. Yeah, I just let it run. And it's not a stop limit. This is a sell stop order, okay? So a sell stop order is by definition, that's a sell market order if the label is touched. So what this is saying, okay, is if price declines, if price goes this way and touches 40-10 quarter, it's going to instantly close that position no matter what, right? That's a market order to close out the position. Conversely, if price goes up, okay, then we do have a limit order at work. If price goes up, what's going to happen if 40-32 3/4 is touched, the stop from down here will then move to break even plus commissions, ergo protected trade and so on. And then as it continues to the upside, if we arrive at 40-49 3/4, does that mean we're going to get filled? No. See, this is the difference, right? Because the limit order says you're going to have to not only hit 40-49 3/4, but you're going to have to either hang around there long enough for me to get filled, or you're going to have to go to 40-50 even, and then you know for a fact you would have gotten filled, right? So again, this is a limit order up here, but the stop down here is a market order. This is just an activator. It's what we call a trigger line, but it will move this up to protection mode. All right. Oh yeah, you didn't see the stop. Yeah, it's down there. Yeah, it's been there the whole time. Yeah, it's just hanging around, isn't it? just sitting, doing not much of anything. So right now we have a lot of volatility, as you can see. Prices going up, prices going down, and it's really what I told you earlier. We can go back to that. As I said before, it's going to likely surprise you, because based on what we've previously seen over the entirety of 2022, knee-jerk reactions, boom, 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 right? Positive news, straight down. Positive news, straight down. Well, the markets get very bored with that, okay? So then we start to ascend, some version of positivity starts to come back into the market. Be careful. Be careful with that. Remember, I told you VIX is very low, okay? And right now, the markets are rallying for what reason? Ask yourself that. What has really changed? Now, today, nothing has really changed, although it did come out and say, hey, maybe what you're doing is working a little bit, okay? But there's nothing that's drastically changed. So we just have to kind of sift through the information and see through the weeds, so to speak. Yeah. So markets could go higher, absolutely, but I just wouldn't expect that vertical move, which we've obviously not gotten that, and I don't think we're going to get it. Okay. So, so again, what I'm looking for, though, what I would prefer, here's what I would prefer, just to be clear about this today. Okay. If price were to decline, that would be better. That would be really good, and absolutely. So what I'm going to do is be an interested party down around the 39.87 quarter today. Okay. I'm going to be very interested if price were to drop down there, because think about what's happening then. Excuse me. Okay, let's think about what's happening then. You had what could be perceived as positive news. Now, the news was, obviously they missed expectations. Okay, but that's kind of positive, right? Because when you have the inflation data come out, you know, bad news is good and all that good fun stuff. But essentially, if they can say inflation is going down or what have you, then that's a good thing for the economy, right? Or retail sales, for example, going down. That's not so much you wouldn't look at and say a good thing for the economy, but you look at it and say, well, if people are not spending like they were, that's what's causing inflation to go down. It's a supply and demand issue always. So that's a good thing for the equities and indices and so on, stock trading, futures, sport, whatever you want to say. Well, let's not say forex, because currency is a whole different beast. But when it comes to your general trading here, our indices and individual stocks and so on, so that could be perceived as a good thing now because they want inflation going down. However, investors, institutional investors, they don't just react to some news that they probably already knew it. Okay? Remember, they're focused on anticipation, not just what's happening today, right? They've already anticipated this. So it makes more sense for price to go down when you think it should go up. It's not that it won't go up. It's that it needs to go up from a location that makes the most sense, right? In other words, drop to make people think that it's not going to go up, and then it'll go up. You know, so that's what I'm watching today. That's why I've said now multiple times that I would like to see price go down, and I'm not trying to, not trying to bet against the market or anything like that. I'm just simply doing what any investor, would do. So, all right, let's see. Yep, Miguel, you're welcome. So you said, so what's the overall accepted percentage amount to risk in a trade? So look, here's the thing. In our training, we teach you all of that stuff. It's covered and so on. So you don't want to go through the training if you want to get all of that stuff as far as our trading methodology and everything goes. But let me just tell you, once you do this for a long time, you can. I don't think about that very much, is what I'm trying to tell you. So in the beginning, if I have, a very rule-based plan, because I do, right? Absolutely. In fact, the plan that I use is there is no subjectivity whatsoever. So, okay, right? But still, I guess after you do it for so long, you don't really think about the percentage of it. That being said, in my opinion, a 2% value is a good number. Okay, I think that's a very basic and general rule of thumb, 2%. But let's be honest about it. Most traders, I would say, go above that. Yeah, most traders are going to go above that. Probably 2. I mean, I've seen traders do crazy things. Crazy, in my opinion. So, not in a literal sense, but I mean, I've seen them use so much leverage, it's not even funny. I've literally seen traders use 100% leverage. I'm like, what are you doing? One trade, one accident, and it's done, right? So you think about however you want. You got to make your own educated decisions. But again, if you're I would say, for me, especially in the beginning, was a 2% value is a good number. And then just as it goes from there, it's not that I'm not still thinking and trying to be within the risk parameters. It's just that I already know I am, and I have been for so long. That's how I built my plan, so I don't really think about it as a percentage value anymore. I just think, hey, there's my trade, and I'm going for it, you know. I hope that makes sense. I'm just trying to be transparent with you. Yeah, don't overthink it. You know, if it's 3%, it's just really what your comfort level is. But yeah, like you said, I like what you were saying, 2% or 5%. You know, you get above 5%, those numbers are starting to get pretty big. You got 20 trades goes against you, you're in trouble, right? One would hope. One would hope you don't have 20 losing trades in a row. That would be very, very bad. Okay, that would be very bad. You're very welcome. Absolutely. Okay, so let's see. There's really nothing for me to do here at the current time. It's just basically to sit and wait. Remember, I'm still waiting on 40.32 3/4. I love the questions that have come through. They've been very good, especially when we see things like, you know, what's the rule around can I enter this position? You know, when we talk about those questions that oftentimes don't even get brought up or thought of, it's a good thing. So anyway, very good questions. And I want to see that 40.32 3/4 get hit, of course, because what that would do is instantly move the stop up, as I said, to break even plus commissions, and that would be good for this particular trade. Now, if it doesn't do that and it goes against, for example, it starts to decline and goes down, obviously it's going to take the loss, be removed from the trade. I'm going to start paying very close attention to this. That, again, is what I want to see. I'm actually, you know, I'm rooting for it, so to speak, right? So again, get into this area, and I'm an interested party on the upside today. Why? I've already explained it, but let me do it a little bit more explicit. If we decline, okay, if we were to go down, we would be violating major structures here, right? Major support. So what does that do? Well, it entices the sellers to chase that trade, okay? So then the seller's going to come in and trade this on a breakout to the downside, and it's going to get the other sellers who are maybe already in the position or what have you, maybe they're going to add to their position. Who knows? There's a bunch of reasons. But when you start to see the sellers, like an influx of them, all in one location, there is no better time for the buyers. That's to say the large collective buyers, institutions if you will. There's no better time for them to come in, right? Because they have so many orders they need to get filled very quickly. They cannot do that in a standard, I call it standard, but in just a general trading area, it's much more difficult to do because there aren't enough orders to get them executed, right? But again, when we start, if and when we start to drop, taking out that 39.96, that would indeed cause a load of sellers and an influx of them all at the same time. So again, what did I just say? You got sellers on the breakout. You got sellers adding to their position. Who bought down there? How do they exit their position? Because they most likely have a stop order just below that structure, right? So what is the stop order? Sell. Because if they bought anywhere based on this support, the only way to exit that position is to sell it. So now you have three different style traders all coming in at the same area. If we break down and we break that 39.96 and then we land right in the mouth of the beast, that's time for me to pay attention. Okay? I'm not saying I want to be the beast, but I like to know where it is. So anyway, yeah, so real quick before we've been in here for not too long, going on an hour here, but before I get too far ahead, I actually thought about it yesterday. I put this out for, I kind of created it yesterday or whatnot. So for we don't typically do this, you know. But for any new members, if you guys wanted to join if you want to get the software or if you want to get the the monthly software is what I'm referring to, or if you want to get the monthly community, there's a discount code for the initial month, right? So it'll be for the initial month. It'll go out in the email as well when we send the recording out. So it's just basically to help you get started with that first month. And anyway, we'll get that out to you, like I said. Or you can feel free to email if you don't want to wait, for our email to go out. Just send an email to support@purefinancialacademy.com. 1 second. There you go. So the email, it should be in the chat there. Okay. But wouldn't a 4-hour DVD mean negate the level? Remember, Benny, you're still, I think your mind is still so attached to that swing and position style of trading, you're having a difficult time letting go of that. So remember, with what our discussion is here today, that's our LTF, right? So you're correct in the sense that you have a different length of time that you're talking about. So very different, yes. Any advice managing emotions once in a trade and waiting for target or a stop to be hit? So I always have to preface anything I say here with the fact that no, I don't have any advice of any kind. And I'm not trying to be, I'm trying to be silly about it or anything like that. I just am prohibited from offering any form of advice, right? So therefore, no, I would never do that. The way that I do it myself is very simple. And I think I don't know, it's very difficult to deal with emotions, which is a good thing, right? That means we're not, I don't mean this derogatory, but we're not a psychopath. And that's the definition of a psychopath, right? And one that has no emotion. So we know that's not the case. So we're going to have to deal with it. It's not to get rid of them, it's to control them. The only way that I've found to do it myself is to get up and walk away. I don't know any, I just don't think there is another way. It's the best that I've found, so that's what I try to do. Yeah, absolutely. Let's see. Will this webinar be on YouTube? I finally found speaker sound hiding under the microphone mute button. Oh no, yeah, so you haven't even had audio. Oh man. I don't know. I don't know about YouTube or whatnot, likely, but we will get you a recording one way or the other. My mindset is more letting price action play out. No, that's great. We can all share our opinions and everything. I agree with that. It's just how do you do that though, right? And then you were saying to let the trade prove you wrong. Absolutely, but I think the question that was being posed was what's happening inside of that time, right? When you are letting the price action play out and when you're letting it prove you right or wrong, what are you doing? How are you managing the emotions that are going on in your mind and in your toes? I mean, so it is very challenging, I think, for anyone, but confidence is of the utmost importance, okay? So the longer you do it, the more confident you become with it, obviously, if it's working for you. If it's not, then you'll never make it. You probably, right? I wouldn't. And so obviously it has to work, but then I need to see it work time and time again. In order to get from point A to point C or D or whatever, hopefully Z, I need to control what's happening from the moment I place the trade to the moment some exit value is reached, okay? The way I do that is to get up and walk away. Now that's when I'm not here in the room, let's say. Like right now, for example, I can't get up and walk away because it'd be kind of hard to run the room if I'm not present, right? But suffice to say, if that weren't the case, I could get up and I could force myself to go do some exercise, to call a buddy, or whatever it is. It doesn't matter. Just get up and go to a different room. Get on the treadmill. I have a well, anyway, but things like that. Yeah. Oh, that's nice. Yeah, you were saying, or someone else. These are all coming from different people, by the way. That's why I have to. But are you saying agree? Cool down period, win or lose? Absolutely. Cool down period is a good way of saying it. Yeah, I like that. Can you explain the entry zone? Absolutely, I will. Let me go through these other questions real quick, and then I'll get that. It is obvious I need to jump into the platform to study more and more and more. Yeah, absolutely. Don't we all, right? I mean, it takes a long time, but there's a lot to cover. There's a lot to cover. Not much I can. This is in relation to your mindset comment that you made. This, again, all different people speak. Not much I can, I think, say. Not much I can say other than trust strategy and make sure my orders are placed correctly. Again, I agree with you 100%. But do you walk away inside of that? Like when you're, is that what you do, or do you just sit there and stare at it, or what? I'm sorry, there's a bunch of questions coming through. David, that was for you. Yeah, but okay, there you go. So same for you. We're kind of saying the same thing. You're just saying best to walk away. I agree. Yeah, I mean that's what that's what I have to do. So let's see. How suitable are the zones to a minute chart? Suitable, extremely suitable to a minute chart, or really any other time frame chart. Yeah. I'm new. Is the PFA 22244 a proprietary PFA bar type? No. So basically, we provide that. We don't charge for it or anything like that. It's free. You can find these Renko bars free. And again, we don't charge for it, obviously. And we didn't develop this type of PFA Renko. There's like a slight alteration to the source code, and so we just named it that to put it in the installer, right? So that it would be easy to find and all that stuff. But again, there's a slight modification within it. But no, you can, like I say, you can find these probably if you do a search on NinjaTrader Forum or something. Just search for different Renko bar types. I don't know what they're called. I mean, it's Renko bar type, but there's different ones, like I think a Uni or something, Uni Renko. I don't even know what that is, but I think that's what they call it. There's a couple different ones. But again, you don't need to worry about any of that if you have our software because it's already installed on your machine. That it comes included in the PFAZoneSuite, no charge. Let me be very clear about that. Okay. Oh yeah, so Uni, so that's what there are. Okay, Uni or UNI, I don't know. Uni, I think is what Uni Renko. Yeah, you could probably do a search for that if you wanted to. Again, if you have the ZoneSuite, you won't need to. All right. This and the previous sessions have been recorded. If so, where could I get them? So you can't unless you're a member. And if you're a member, all you got to do is log into the members area, and there's a recordings button right there. So it depends on let me rephrase. What I mean is you can't get every day's recording because that's our training and everything. If you want to review like these sessions and things like that, most of the time we'll post them on YouTube on our channel or something. We have to clean up from time to time, right, and so on. But like really old, outdated stuff. If you are, however, a member, they're all there. So you can just go into members area or your membership guide, and if you scroll down a little bit, you'll see a big recordings button. and you just click on that, and they're right there. Yeah. Yeah, no worries. Absolutely. Let me go back to the previous question before I conclude the session. And there was a question about the entry zone. Okay, so the entry zone, I don't want to make changes to this chart. Okay, I just want to leave it running as it is. Yeah, it's just, I think for obvious reasons, but I'll say it anyway, there's an active position here. If I go messing with this chart, I may lose some calculations or something, or make a change to it accidentally or what have you. So I don't want to do that. What I'll do is go over here, say to this chart. I'm just going to open it up like this. Okay. Now, let's say that actually, you know what? Let me do this so that we're showing the same thing. Now, this can be used on any bar. It doesn't matter. Any chart, what have you. I can show you right here really quick, and then I could actually, you know what? I'll do it fancy for you. How about that? So let's do something like this. Let's go change this to the PFA Renko. I'm just going to do. I'm just going to keep it. Obviously keep them the same. Okay. Now here I'm going to go load like 30 days, which is again it's the same as what you see on this chart over here to the right. Okay. But I'm going to make an alteration. I'm going to go up here. I'm going to change this to the 4-hour zones. I might need more data. Nope, there they are. Got it. All right, excellent. Okay, so here's what I'm going to do. Let's say, remember this area down here, that 3987 quarter that I told you of interest? Okay. So let's say that price were to drop down there today. All right, so there's my zone. I'm just going to clean this up a little bit. All right, so what I could do is I could go down there and say, you know what, I want to take a trade down here. However, I need to manage my risk, which is the most important thing, I guess, right? Now, what I want to do is I want to go down there. In other words, I want price to decline. Okay, so I want maybe price to go down, and then I want to find a reason to buy the market. So that could be, here's your execution, right? This is what I said before. This is actually the least important. But for simplicity's sake, I'm simply going to go down there and look for an up bar, right? So here's what I'm going to do. And this is, I don't mean to, I'm not trying to say this I'm just very proud of this because it helps so much with certain things. So for example, let's say, oh, and by the way, you can see what just happened, the stop move to break even plus commissions. So that's yet another, that's actually 4 in a row for 2 days. That's pretty good. Anyway, so I could go down here, and let's say that I want to buy down around that 39.87, but I want to confirm my entry, right? So I know I get down there, that's when I'm looking for my execution. Well, I'm already on my execution chart. Yes, but also the software has the capabilities of multiple time frame functionality and so on and so forth, right? From ample different things. So we could show multiple time frame of so many different things, right? Different time frame trail stops, trend IDs, trend lines. You get the point. So a lot of things we can do. What I could do here is I could say, you know what, listen, I'm going to turn on my entry zone, and I want to take an up bar entry, okay? So I want to take an up bar entry. However, what I want to do is only take it down here, okay? So what I've now done is specified the location, and I can get up and walk away or whatever, it's theoretical, but I could make this whatever you want it to, so I could do it like that or, what have you, okay? So the reason, by the way, the reason that the zone is adjusting, watch what happens. You see how the bottom is coming up with me? It's because of a maximum risk, right? In the settings, I told it to only allow X amount of risk. And so if I go down, the risk is getting smaller. See, the zone doesn't move. But if I go up, it's saying, hold on a minute, you said, okay, so the max risk. So I'm going to take the whole zone down. I'm going to do it like this, because wherever the low value is, that's really what I'm most interested in, right? And then I'm going to pull this up, and I'm going to say, uh-oh, hold on, it went above this particular area. So let's give this kind of like a, there's multiple ways that you could do it, but again, I want to be very careful not to exceed that risk, my risk parameters. So what I'll do is just, I'm going to drag this up a little bit, and I'm going to do it something like that. And the reason that I'm going to do this is because what that will do is by the time price has confirmed itself, and I get that up bar for all intents and purposes, it's going to look something like this, right? Even if it touches the high of it, if I don't give it a little freedom above the zone, by the time that up bar occurs, it may be, even if it's one tick above, you know, wherever my entry zone was or is, it will not execute the trade. So this is specific. I'm saying here's my entry zone. Only allow that entry to be executed if within it, right? So I'm giving it a little bit of freedom just above the zone here because I'm confirming that entry anyway. I'm coming down. I'm saying this is where I want to arrive, and then I want an up bar. Okay, so pretty much everything is already done, with the exception of submitting that order. I would, of course, want to go submit the order, right? Yeah, but that's the purpose in the entry zone. That's what it does. You have a further question about it? Hopefully that helped. This is just one example, by the way. I told you I was joking around a moment ago, and I said I'd do it a little bit fancy because people need to understand the capabilities here, right? Just because you're on one time frame doesn't mean that we need to do everything from that time frame. If I'm looking at 4-hour zones, I can put them anywhere I want them and still have that information on my execution chart. Conversely, I could put my execution information on my larger time frame chart or whatever. But ultimately, I have so much functionality here. I can control how this is going to take place. So for example, let's say, again, however you want to do it, but let's say that I only wanted to do this, inside of this area. In other words, I don't care. I'm not willing to enter at 39.88 or whatever. That's too high. It has to be 39.87 quarter or lower. Okay, cool. So just understand that right now, this is a done deal. So what's going to happen is we're going to get a bunch of up bars, right? I mean, one would think. We might not. It's possible that we go straight down there and have all red bars. But I imagine that we're going to have a bunch of them, right? So we could, maybe we get one right here, another one. Or maybe we go down and then we get another green bar or whatever. That's an up bar, okay? And the way that I have them color-coded, by the way, is pretty typical. Red for down, green for up. So if we go down and we get another green bar like this, and again, this might be a green bar, an up bar, or if we go down like this and we get one right there, it's not going to execute the trade on that up bar. Why? Because it's not within my entry zone. So I'm controlling that. All right, very good. I'm going to go cancel that order. There you go. Oh, thank you. That's nice. I appreciate that. The kind comment about the great example. Thanks, that was great. We'll let you explain the adapt option. Yes. Boy, oh boy. Again with the questions. You guys and gals are amazing. I'm telling you. Okay, so let's go back, and you could submit this or not. Ultimately, right now, it's irrelevant for what I'm about to tell you. So go back into the menu, okay, and do you see how adapt is enabled? Now, if I turn that off or on, it's going to have a very big impact on what the zone does or does not do. Currently, as you can see, I have it enabled, which means that the zone, essentially what I'm telling the zone to do is adapt to any lower low that is made. So if price goes down here and I don't get my up bar entry, it keeps going. Okay, let's say it drops down into that next zone. What's going to happen, because I have adapt zone turned on, it's going to do this. It's just going to keep going to the lower, 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 low. Okay? So I'm essentially saying I'm willing to go lower than this area, but not higher. Okay? This is because, think about this. The whole concept of investing, right, hypothetical or otherwise, is buy low, sell high. I mean, ultimately, that's what we're trying to do in all aspects of our life. That's what this is controlling, right? So when adapt zone is on, it will adapt to the lows as it declines. However, it will not adapt. Once it's gone down, it will only go up. Well, the zone will never move. It will never change. So if price goes up like that, the zone will not adapt. It will not move because the maximum risk is what it is. Okay? So again, it'll go down but not up. If I'm looking at the opposing side of the market, i.e. I'm looking at, up here to sell, then I could take my my zone here. Obviously, I'd want to change things. So let's turn a down bar entry on. Okay? So in such a case, I could do something like this, right? Now, let's see, there we go. So now I'm just doing the inverse, and I'm saying I'll take a sell, but only if it's up here. So what would then happen as I have the adapt zone on, the new highs that are made, the zone would adapt up, but it will not go back down. Okay? And that's what it's doing. Does that make sense? Just want to make sure. Okay, yeah, good, excellent. Okay, just to the last thing that I'll mention there, right? If you don't have the adapt zone turned on, let's go back to our initial. Example. Okay. So if I do something like this, then I go up here and I turn this off. It will not adapt lower anymore. So now if this happens, too bad. It's still irrelevant. So the only way that I would then get an entry is if it comes back up inside of this area. Okay. So if I want that to happen, okay. But suffice to say, if I don't want to adapt to new highs or lows, then absolutely I need to leave the adapt zone off. If I do want to adapt to the lower lows and or higher highs, then I need to turn it on. Okay. But either way, wherever this zone is, the entry zone, it will control where the execution can or cannot occur. All right. Very good.
Order filled.
Oh, okay, so we dropped back. So do you see what happened there? So we dropped back, we've protected that. And because of, I'll look at the P&L. Remember, and to be clear, I said this from the beginning, as I do every day, because I'm always, this is just how we have to do it. It is what it is, but I'm always upfront about it. So you can see the account, right, SIM 101. So just want to be clear about the account that this is being traded on. Oh, yes, this is getting exciting. I hope this drops down. So let's do that. If I were going to set this trade up today, here's how I would do it. Pretty much exactly as I just showed you. I mean, there's really no difference. What I would do is I would come in here, okay, leave my my OCO, etc., and I would myself in this position. The lower it goes, perfectly fine. So I come in here, up bar, right? But I just want to take this down. There we go. As such, and there we go, right? So then okay, so like that. Simplify it. Go down. I dictate price area. Yes. You go to Best Buy. You go to Best Buy today. That TV that you really wanted, which you thought was going to be $1,000. Okay. But you said, I will buy that TV if for whatever reason, some miracle happens, and I go there today and that thing's on the sale rack for $800, I'm buying it today. What did you just do? You dictated a price value that you were willing to pay, period. You said, if it's cheaper, I'll buy it. Now, if you go to that's this right here. That's what's happening right here. I'm saying today, get cheaper. If miraculously some, whatever, today that happens, okay. So I'm dictating the price value. If I go to Best Buy and that TV that was $1,000, and I said, you know what, if miraculously it's $800, I'll buy it, whatever, and then I went there and the TV's $1,200, what am I going to do? I'm certainly not going to pull out my card and purchase it. I'm going to just look at other TVs or accept the fact that I can no longer afford that TV that I wanted, right? I'm just going to suck it up and keep moving. But I'm certainly not going to buy it when the value goes up, right? So again, that's kind of what I'm trying to achieve here. So I'm saying this is what I'm willing to do, either happen or don't. But I want to make my own, I want to dictate my own rules here, okay? All right, folks, any final concluding questions? I'm going to run. I have some things. In fact, here you go. I have a meeting myself that I'm going to be stepping out to. See, remember I told you I try to make some meetings sometimes. I can step away. I don't have to look at this stuff all day, every day. And it sure is advantageous for me. Oh, you're very, yeah, oh, goodness gracious. You're very welcome. Thank you all for the very kind comments coming in. I'm glad to hear it. Super nice of you all. And what I always try to do is just hang around for just a moment just to make sure that I don't have any questions. But anyway, we got to see a few things today, and at least we got to see one trade. On the P&L, yes, I think it was a again, hypothetical, and simulated, I think it was $500 there because of the 4-tick protection on that, right? All right, so nothing to write home about, but suffice to say, better than negative. All right. Hey, thank you. I appreciate that. I'm glad you enjoyed it. I really am. I also enjoyed it, as always. Yeah. There's so many magnificent people around the world. It's truly amazing to me when you can get in a community and have, many of those people together. There's so much positivity in the world today. You just have to focus on that. Since the negativity can be very loud, right? And it just there's so much positivity. So I just don't see letting negativity kind of scoop in with such a small percentage and make such a loud noise, right? I see it every day. I work with so many amazing people from around the world, and it is truly astonishing just how kind and it's a pleasure. Yeah. All right, folks. I don't see any further questions. So I'm going to go ahead and end on that note. I hope you all have a wonderful rest of the day. We'll do this again very soon, and just keep rocking, okay? So God bless you. Take care, everyone, and bye for now.